Hello and welcome to Big Deal. I'm Nisha Poddar. Now, the retail sector in India is at an inflection point with a strong focus towards an omni-channel approach, which is a combination, remember, of online and offline platforms. Now, two important trends on this have been mergers and acquisitions for acquiring the digital capabilities, so acquisitions to transform the company. And the second, the valuation uptick because of the strong force created by this combination. And big announcements to both these themes have really happened in this particular week. So let's discuss with the industry experts now. Joining me on the show are Rahul Arora, the CEO of Nirmal Equities. He's right here with me in the studio. And also joining us is an industry veteran, Lalit Agarwal, the founder and MD of V-Mart Retail. Gentlemen, so good to have you on CNBC-TV18. Now, starting with you, Lalit, what do you make of the big announcements and the game-changing moves really taking place in the industry? Just yesterday, we have got the announcement of Reliance Retail acquiring the valuation of $100 billion with QIA investments. So the foreign investors are really ascribing a lot of value with this omni-channel and the retail thrust in India. What does it mean for the sector?
Hi, Nisha, and this is definitely one of the very, very good news for the retail industry as a whole, because we definitely, all of us understand the potential of India and potential of Indian consumer, and also the potential of the consumerism which Indians have. So I think, and then the growth that we are able to see in the consumer aspirations and consumer mindset, and the amount of the rural population and the rural audience or the consumers that we have, who is still not accessible to a lot of fashion and who is not still accessible to a lot of product and experiences. So with all of these announcements coming in, it definitely brings in and gives you a lot of.
All right, we'll get back. That network is patchy, but Rahul is right here with us. So he was quite euphoric about the kind of valuations, and of course, the overall sector could be re-rated if more and more investors ascribe this kind of valuation to the sector. Now, Rahul, you have looked at the consumption sector for so long. At this moment, how do you see it developing, and what are the trends that are really picking up?
So first of all, Nisha, thank you for having me on your show. I think the trend setting was sort of done about 2 or 3 years back when I think Reliance had raised money from Saudi, from RDI, etc. I think the valuation then was $50 billion. Now it's doubled. I think the one thing that has changed in a very seminal fashion, Nisha, is the kind of consumption story that has emerged post-COVID. Lalitji's point is so well made that everyone knows the India story, but the kind of demand that you're seeing for aviation, hotels, QSRs, electronics, I think this has never been seen. The potential was always there, but post-COVID, I think the way it has unleashed itself. And then you have a lot of players who are in the consumer electronics and similar allied spaces that are setting up manufacturing facilities here. iPhone 15 is going to be assembled in India. So I think retail now is, as your introduction or lead said, is at an inflection point. This valuation doesn't surprise me. It's not exorbitant, but obviously the headline is $100 billion, so it becomes the third or fourth most valuable company in India, one of which is the parent. So I think, Nisha, the one thing that people need to keep in mind is, as far as this valuation is concerned, is this is actually 50% of Reliance's market cap now. So Reliance's market cap is about 17.5 lakh crores. This deal values retail at about 8.7 lakh crores. So I think, tongue-in-cheek, if I may, even though I know it's a promoter entity, the timing is quite interesting ahead of the AGM. I don't know if there'll be a listing announcement at some point, or at least a talk about a roadmap for this, because you have some very marquee investors. But look, Nisha, this is a $1 trillion industry, retail. And e-com is what? About $70 to $100 billion. It's not even 10% right now. It's I was just reading some reports that are saying that India, by 2032, just the online is going to go from 70 billion to close to 950 billion to 1 trillion. So I think all the metrics are in order. And like I said, the valuations, I think we were discussing this off air as well.
Yes.
This is what, a 2.5-3 lakh crore top line company. So at 8.5, 8.7 lakh crores, it's 3 times sales on a trailing.
Yeah.
Trent comes to you at about 8.5.
Yeah.
V-Mart comes to you at about 5.5. So
Yes.
when you start, Metro Shoes, which listed not too long back, comes to you at about 12-13 times
Yes.
price to sales. So the valuations are not exorbitant, but the value, just that number of $100 billion
Yes.
is something that we're not used to seeing in India. But the timing couldn't have been better.
Of course, but Reliance Retail has also grown at a very scorching pace in the last few years. And as you rightly pointed out, the entire digital e-commerce space has really grown after COVID. Lalit Agarwal is back with us. So Lalit, you were making a point on what it means for the sector. And COVID led, the online approach has been sticky and now is becoming more and more important in your business.
Yeah, so one is the online approach. Definitely, digitalization is creeping into everyone's lifestyle and their shopping behavior and their overall user behavior. So I think definitely one is online, but also is the multi thought process or omni thought process, which is going to be multi-channel, because it's just not going to be online, but also offline. The aspiration level, the consumer is definitely wanting more and definitely wanting to consume from a retailer who have all the channels available. So that's one piece which is coming out after COVID, and which is what we are seeing, that there is a change in consumer behavior, a lot of digital adoption in terms of the way they pay, the way they research, the way they would now buy. And that's what we are able to see. And this is why both omni-channel means the physical experience as well as the digital experience. And how do we club together, wherein out of the 4 times that the consumer is buying in a year, maybe 3 times they buy offline and 1 time online. How do you make it enable? And how do you make the experience enabled also in your store with an omni mindset, and also when he's away from the store in the rural territory or in the at house, how does he have a similar experience like being in the physical store? So that's the overall approach which one has to see, and that's where it is just not giving the front end to the customer, but also making your team, making your processes, making your internal ways of analytics more compatible to this omni approach, and making your product ready for this omni approach. And those are some of the things which are very important. And that's the people or the companies who are able to do those, they are able to get those benefits, and definitely that's the future. And that's why valuations are being created and valuations are being paid by certain investors.
That's right, the phygital approach that we call it in the e-commerce, in the commerce space. But Lalit, I wanted to understand, even you have, acquired for this whole digital experience. What are the challenges as well as the synergies one must look at, or how does the entire synergistic process really pan out while adopting from one type of platform to another? Give us a sense of that.
I mean, see, Nisha, this definitely is the whole culture, and it is a whole theory of, thinking about business as a business. And because people who are deep into retail and offline retail or brick and mortar retail think the way consumer would behave in an offline manner. And people who are just doing online are thinking only in an online manner and a virtual manner. So how do you combine both the thoughts? And there are differentiated thought processes, because this is where in offline, where the customer is actually making an experience of the product, actually looking at it, actually trying it, actually visiting it, actually talking about the product. But when you are in the digital space, it is a different. And when you combine the two, it really brings out a unique problem areas, or brings in a unique opportunity, which becomes much more important in terms of whether you are defining the product, the kind of product that you specify, the cataloging of the product, how do you describe the product, how do you enable the customer about the product, and how do you make your search and the discoveries much more easier. And above all is about the communication. How do you communicate about the product? How do you talk to your customer? How do you enable it wherever, anywhere with the similar experiences?
Yes.
And try to see even the consumer continuity of experience in the same way, because that's also as important as this. Because there are challenges, because culturally people think only in one direction, and this is how departments are divided within retail. This is the brick and mortar team, this is the omni team, or this is the online team. And how do you merge both the team? How do you merge the mindset? How do you bring in the techno-functional mindset of each employee, each and every processes that you run. So those are some of the important things which becomes bottleneck for retailers, and those are the bottlenecks for retailers which one can't fulfill, whether they are online retailers or offline retailers. They both go through the similar experiences and similar problems, and that is why becoming an omni or a successful omni retailer has been for a very, very few retailers, because that is the most difficult proposition for retailers right now.
All right, very well pointed out, Lalit Agarwal, there, that it is not as easy, even though we talk about so many omni-channel companies and acquisitions. You have to also make sense of collaborating the two platforms as well. But Rahul, when you look at the companies, it has been reverse as well. It's not just that the old brick and mortar companies have bought digital capabilities like some of the big ones like Reliance and Tata, but somebody like Nike has gone into the offline space as well. They want to get their brands in airports and tier 2, tier 3 cities as well, and they are expanding on the store space as well. How do you see this trend as well? And some of the shareholders had raised concern about this as well. So how does one judge the valuation and analysis based on this?
You've raised two very important points, Nisha, and I'll give you data to support my answer. Nykaa doing what it's doing is very interesting, and the likes, because when you look at online consumption in India, mobile phones and electronics account for 53 and 44% of the total value of the goods sold online, right? So 53% of mobile phones sold in India are through online, 44% of electronics sold through India in India are through online. However, when you come to fashion, apparels, wellness, even furniture or home, all those are around 15-16%, which tells you that people even today, and now with online becoming a force to reckon with, still prefer for these 4 or 5 verticals to go to stores, as Lalitji was pointing out, the touch and feel of it, right? We may open an app of a clothing, whether it's a Reliance or a Zara or whatever, but we may see it on the app, but go to the store and try it out, right? So I think there is a huge opportunity in the offline space, because the online consumption, when compared to electronics and mobile phones, is probably at a third in terms of penetration of online sales. The second point that you make, I was reading some reports written by third-party consultants. 60% of the online sales that happened in the last completed calendar year, 2022, were in tier 2 and tier 3 cities. Right. So Lalitji operates most of his stores in what we would probably call the Hindi heartland, right? So he obviously understands that metric far better than most people, myself included. But the point being, I think conventional retailers will have to adopt this, and new retailers who are coming in through the online will have to go offline. You can see that in the Titan Carrot Lane deal, right? Why would Titan acquire Carrot Lane when it's a behemoth? It's to look at new price points. Carrot Lane appeals to a totally different section of the consumer, the young boys and girls, new kinds of jewelry, for guys, bracelets and things. So all of that exists, right? Lever has gone ahead and made an acquisition of Oziva. ITC went ahead and acquired Yogi Bar. Marico acquired, somebody in the wellness.
All these
food.
are digital first.
Absolutely. So
brands,
these are either you do it. So it's like IT services, Nisha. So when India started going into digital, the TCSs and Infosys and Wipros of the world did not have the capability. So their first port of call was, chalo acquire karte hain. हम अपनी capability बढ़ाते रहेंगे. Let's at least go out there and start acquiring companies. So this may be the first port of call, but eventually systems will build up. So I think your point on tier 2, tier 3 is very well made. And I think that report also said that 80% of the incremental online sales between now and 2032 are going to come from tier 2, tier 3 cities. That's the kind of investment potential.
No, that's
so
where the aspirational Indian and Bharat is, which the digital,
but I think, for things that touch our skin, I think the offline experience is always going to be that much more value additive. And also, I think it's an entire experience, right, Nisha? So, you look at a Metro Shoes, for example, right? That's done so well.
So
it's a retail player.
I take your point on that, but we'll get down to the numbers also. This is the customer acquisition cost, as well as what makes more sense when it comes to the margins. We'll talk about all that with Lalit and Rahul right after this short break on Big Deal. Stay tuned.